The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour at your headquarters for technical trading and investing. That is TFNN.com. Boy, what a beautiful week from the headquarters of technical trading, and that is Clearwater, Florida. Just a absolutely gorgeous day, and you go out there in the sun, and it's almost like it goes right through you. It's kind of like the first day of summer. It's been so, we get about 2 months of miserably hot, humid weather, and then about 4 months of really great weather, and then 2 months of cold weather, and then about 4 months of great, perfect weather again. And we are in that period now where it's the Goldilocks thing. It's not too hot, it's not too cold, and it's beautiful, and it's almost cloudless, and it hasn't rained yet today, although I suspect it will later. We've had probably one of the wettest summers in history. It's at least here in the spot I'm at, this thing has rained every single day. I got ducks living out in the canals out in front of me. Kind of neat. They're out there having little babies, and I'm trying to find out where they hid their little egg. But it didn't really have anything in history today that really made me want to talk about it. But I did have a quote, and it is from probably the father of the libertarian movement in politics, and it's H.L. Mencken. He lived between 1880 and 1956. A prolific writer, wrote a lot of beware of government treatises that pretty much predict just about everything that happens in politics. But I like this quote. The men the American people admire most extravagantly are the most daring liars. The men that they detest the most violently are those who try and tell them the truth. And everybody wants to be told that they're a little above average, a little better looking than everybody else, and that healthcare will be affordable, that it will, all the programs of government will be perfect and help everybody. Unfortunately, they all have severe side effects, and now that we know what those side effects are going to be here shortly, maybe we'll wake up as an American people. Anyway, going on with that, the UK FTSE was up 0.6%. Germany's DAX is up 1.5%. France was up 0.9%. Spain up 0.7%. Portugal off 0.7%. Italy up 1.1%. The Fighting Irish were up 1.5%, and Greece was even up 0.2%. So modestly higher in Europe today. We'll see how they react to our little bounce here. And what else do we have? We're up 11 points on the S&P cash. We were up at 1705 today. Volume is not really a ringing endorsement of this move. Just 2.1 billion shares as we speak. The NASDAQ was up much stronger this morning. It's up just 1 point after being up, what was it, up 32 points? That was 32 points higher. Is that right? Yeah. 37.56. So it's rolled off fairly extensively. It's come back down. Of course, it had a issue here, and that is Apple. If I find that real quick, Apple off $12 or 2.7%. Again, we talked about this last week. And, of course, the big lie was that they were going to get the mobile telecom deal. They were going to be able to pull out a phone at $140 instead of $180 for their cost, and their margins just didn't hold up. And when you're making 69% margins, even 55% margins, aren't good enough. And you can watch Intel. Intel bounces around from somewhere between 59 and 65% margins over time. Probably the only company that comes close to this with this kind of margins in hardware. And you can see what happens when their gross profit margin goes up or down just 1.5%. The analysts are all out there moving it up and down. So won't be any different than Apple, and that is they have to prove that they can get back into that 65% margin range, and that is very, very hard. The only product that they have that may ever do that is the iPhone, and the rest of what they pile on may have a big problem doing so. So anyway, what else do we have going on out here? IBM, some of the other stocks, they're doing okay. Probably the most interesting to me was Google. Google went up to $8.97 today, has reversed course, and is now lower. But I didn't think this was anything that wouldn't happen. I thought we'd have maybe 10 points up or 10 points down. And, of course, that we're fading out here. Maybe just looks like they ran the shorts a little bit before Ben Bernanke's revealing himself on Wednesday at, just a little after 1 o'clock. So 1698 and 2.15 billion shares as we speak. Probably going to fade now into that Wednesday announcement. But I think that we've got probably somewhere around 1685 is probably where we're going to go into that announcement on Wednesday. And just figure we're not going very far. The people in the IPO business really love this sideways action and have rushed a slew of IPOs to the marketplace. Probably just a couple of them that even come to any kind of level of scrutiny. Club Corp Holdings, symbol will be MYCC, plans to raise $300 million. 152 golf and country club businesses, sports, and alumni clubs, that kind of stuff. Most of these others all out here are, just raising about $100 million, which sounds a lot to us. But going public for $100 million just seems almost rather a cruel joke in what we have here. One that interests me this week is Rocket Fuel, FUEL. Provides an automated platform for optimizing real-time digital buying and advertising plans. It's going to raise $102 million. But this one may actually come out to be something someday. I'm not saying buy it at the IPO, but interesting. See how these actually make it to the market later this week. We talked a little bit about odds and just understanding statistics last week. And I wanted to kind of continue that while we've got a market that isn't strongly biasing itself one way or the other. And I figure, like I said, maybe we got 15 points down here. But for the most part, I think we are range locked until the announcement on Wednesday. And then we'll instantly go into who's going to be the next Fed president. But it is going to be what it is. Anyway, one of my just favorite guys of all time we're going to talk about a little bit, and then my favorite guy in trading. But one of the interesting things I heard this weekend was someone blabbing upon science and consensus. And I thought that these guys didn't know the first thing about science. It has 5 major tenets: the formulation of a question, a hypothesis, a prediction, testing, and analysis. And this guy was going on and on about something, I don't know what it was, global warming. But it was untestable. And to me, that is a glaring error out there. If you do think something right, you do have a hypothesis, you should be able to test it. And if you can't test it, you should be able to predict it. Those predictions should come reasonably close. You should have explanations why they don't. Basically they had a lot of predictions, and nothing came up correct. And of course, lastly, an analysis that involves determining what the results of the experiment show and deciding on the next actions to take. The reason I bring this up is probably the worst people in science ever have been the people in economics. They pontificate ad nauseum, and they have absolutely no way to prove whether they or their ideas are actually usable and are true. Can other people actually go back and reproduce the results? And 99.9% of the people cannot. One of the guys that can, my hero, started real economy science, and he did it by paying people real money and having real games and getting a significant amount of participants. Most of the time, people don't like to actually pay people, and of course, you point a camera at somebody, they act different. I'll guarantee if you give them money to participate and it makes them their money, it certainly will alter what they do. But this is him on bubbles. Right now, we don't understand why people get caught up in self-reinforcing expectations of rising prices. The first time you were in this experiment, you may have bought early and you may have sold before the break. Bring those same people back another 2 or 3 days, put them in the same environment, and we get a lower volume bubble. Typically, it booms early and crashes earlier, and because they're expecting a bubble. Bring them back a third time, and they tend to trade fairly close to the fundamental value. What they found out was that he put a bunch of people in a room, told them that they had 6 hours to trade. Any money that they were able to make at the end of the trading session, they were able to keep. He took both people that knew nothing about trading. He took floor traders from the Chicago Board of Trade and ran it through these people. And there's one thing that happens, and that is new people to the market almost always buy at the tops and carry right in until the market fails, leaving them no money. His actual science experiment basically told them, you've got 6 hours. At the end of 6 hours, all that money goes to money heaven that you don't have in your account locked up. So everybody knew that it, whatever it was, 4 in the afternoon, that was the end of it. And if they hadn't sold it, they weren't going to make any money. What they found out is even in these lower volume bubbles, the tendency was to wait until the absolute last moment, and most of the time people failed getting out of the market exactly at the last moment, and most of them typically ended up losing. Anyway, we're going to go to the break here. We're going to talk about a little bit more about Vernon Smith, then we're going to get into my favorite guy of all time, and that is Jesse Livermore.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we were talking a little bit about Vernon Smith, and he won the Nobel Prize for Economics, I think in 2003. 2004, probably the only one that ever won it with actual science, which is one of the reasons I like. But he was able to actually prove how bubbles exist, why they exist, and a very fascinating read. If you search for him and Google him, you'll find a lot of videos out there that are very, very interesting. Of course, if you are trading options today, maybe you already know, or if you're not in the options market, already know that once again the options, well, not the options, but the markets have had another hiccup today, and I think all the options are once again trading. But it just seems like we're getting a lot of failures here lately as we get into these higher prices in the market, especially with the lower volume. Very disconcerting what happens when we have high volume in the markets have problems. But anyway, I wanted to get in probably, may even spend the rest of the show on this. Jesse Livermore. In 1923, it was first published. It was actually modified, I think, a couple of times. I've read the later versions. I think it goes up to 1934. But first published in 1923 is the thinly veiled autobiography of Jesse Livermore. He paid a ghostwriter, Edwin Lefevre, to actually write it, and would spend afternoons talking about his trading. And, of course, there's some things in the version I have that I know that happened after the stock market crash in 1929. So it has been updated a few times. He was kind of manic depressive when he was on the straight and narrow. He could basically clean out the stock market. In 1929, he actually was short and made $300 million, was able to give it back after a number of years. He did put in a huge endowment for his wife and kids. So a lot of times people say he died broke and penniless. That was untrue. He just couldn't get to the money. After going bust boom several times, his wife said that he was going to always put money away. Always a good idea. But it's very good. Anyway, some of the best stuff of that book I want to go through as we have time today. And we'll think about it. But if you haven't read this book, then I don't think I would say that you're going to have to learn some very expensive lessons that have been out there, and for the price of $20, you can get them. These are all quotes from his book, and then I'm going to tell you what they mean from them. But probably one of the first things he has in the book here is just the psychology and the history of Wall Street. He said, another lesson I learned early is that there's nothing new in Wall Street. There can't be, because speculation is old as the hills. What has ever happened in the stock market today has happened before and will happen again. It's kind of a broad brush, but the stock market, for all practical purposes, is like a snowflake. There can be a billion different variations of it, but when you look at it, it's still a snowflake. You can say this is one of a kind. It's different this time. But really, is it that much different? And, of course, the longer you trade, especially when we find people that have been around for a very long time, like some of our new hosts here that have been in the markets 50 years or 40 years, you find out that what they've learned can only be acquired. It isn't something you can go to school and be taught the first day. It's something that you can only learn over time. And every day that I'm a trader, I learn something, and I am able to apply it into the future. But you never know exactly what that is going to be. But one of his best quotes out there. And that's why it's important to know the history of the stock market. Right now, I'm sitting flush with cash, and I'm not going to get too excited about getting into any position. I'm going to react, not anticipate what's going to happen on Wednesday. And one of his best quotes that I have always written down is, what beat me was not having brains enough to stick to my own game. That is, to play the market only when I was satisfied that precedents favored my play. There is a time for all things, but I didn't know it. The desire for constant action, irrespective of underlying conditions, is responsible for many of the losses on Wall Street. We'll be back in a minute.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Anyway, we're going through Jesse Livermore here today. You can always give me a call at 877-927-6648. As we left off, one of the best quotes out of the book are, the desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street, even among the professionals who feel that they must take home some money every day as though they were working for regular wages. And I have to tell you that when I started off trading, it was wonderful, exciting, and probably I did it too much. I probably gave a lot of money back that I would have been better off sitting off, taking vacations, spending that money on something else than giving it back to the market. I didn't understand that the conditions, just like hurricanes, you know that they're going to come at certain times. You can't bet on it, but you're probably pretty good. I know that I don't spend any time real trading between Christmas and New Year's. There's nothing there. It's like trying to plant corn in the middle of December while it's snowing. It just doesn't make any sense. But I sat through a lot of Augusts that had no volume. I would have been better off doing anything else. When trading did come back, I was still tired. This is not a business that forces you to be in the market all the time. And probably the best thing I've ever done is take vacations or do different things or walk the dogs or do anything else when I know that there probably isn't a whole lot going to happen between now and maybe a long weekend or something else. But just remember that. Is there a desire for constant action, even though you know something's not going to happen? I was 20 when I made my first 10,000, and I lost all that. But I knew how and why, because I traded out of season all the time. Because when I couldn't play according to my system, which was based on study and experience, I went and gambled. I hoped to win instead of knowing that I ought to win on form. If anybody's watched any of the poker shows with all the professional poker players, kind of harder to find out there anymore, but I bet they're going to come back hot and heavy when online gambling comes back in the United States, which I think it will in the next year or two. But the best players, at least at No Limit Hold'em Poker, pretty much all say the same thing. They said, I deserve to lose because I went and gambled. They knew all the odds. They played the odds and they accepted them. Sometimes they just went and gambled, and most of the time they lost. They knew the difference between doing what was right and over time winning, and gambling, which is just wild speculation, and they shouldn't expect to win over time. But that is at the core of being a good trader, and what I learned from this book. It was the change in my own attitude that was of supreme importance to me. It taught me little by little the essential differences between betting on fluctuations and anticipating inevitable advances and decline, between gambling and speculating. And if there was any good definition of it, that is it. Between betting on fluctuations and anticipating inevitable advances and declines. And are you anticipating an inevitable advance or decline? Or are you just betting on the next 5 minutes? And I have to say that I spent a lot of time playing minute and 15-minute and 30-minute charts. And just for my peace of mind, I'm much better off playing daily charts, not getting too much in the weeds, and looking at long-term trends and anticipating inevitable advances and declines. I think it's helped my trading. On charts, Jesse was kind of interesting because he was a guy that pretty much, there weren't great charting programs on computers. Basically, Jesse and most of the big men in the street would pay people to draw charts up at night that they could look at before the next day. Even then, a lot of times, the volume that came out and the prices that came out of the stock market, it wasn't even into the 1925 area, would take 2 or 3 days when the market got busy before they actually even found out what happened. They would see the ticker, but they wouldn't have a total volume. They wouldn't know what the high price and the low price of the day was. It may have not hit the ticker. There were outages if you weren't sitting right on the trading floor. And you kind of have a jaded view, but I think it's appropriate. I should say that a chart helps those who can read it, or rather those who can assimilate what they read. The average chart reader, however, is apt to become obsessed with the notion that dips and peaks in primary and secondary movements are all there is to stock speculation. If he pushes his confidence to its logical limit, he's bound to go broke. As he was more than once quoted as saying, every sunken ship has a chart. That's why there's stops out there. And if you're in the market like he was the market. He was the Carl Icahn of the day. Stop's probably not going to do you a whole lot of good. If you start selling and everybody else is starting selling, all you're going to do is wash the stock out. You have to be very smart about the way you buy and sell. And normally you have a long-term view, which incorporates paying as many people off in the news business to tell everybody that your company's coming back. I think of kind of like BlackBerry or some of these other stocks out here that continually get press that tells them that they're going to do wonderful, and they're not. But that's normally how the big guys do it. They don't hang everything on one thing. Of course, us probably trading less than Jesse Livermore was in 1930. Probably even that is a conundrum out there. But just because the chart has it, we know that we need to put stops in. We also know that there are other organic reasons that I bring up from time to time that stocks are going to move lower. IPO, lockup, secondaries that dilute the stocks. There's a lot of things that may not be in a stock until they actually happen. And especially more and more that is true with a lot of the laws that came out of the excesses of the early 2000s in the stock market, meaning that a CEO that starts speaking a lot can go to jail. And we haven't seen any of those guys go to jail. They're better off just saying nothing, and for the most part have. The successful trader has to fight these two deep-seated instincts. He has to reverse what you might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear his loss may develop into a much bigger loss, and hope that his profit may become a much bigger profit. Kind of, when it hit me the first time I read this, very interesting. We had to really think about what's going on. We do have a caller. We're going to go to Dan in New Jersey. How are you doing today, Dan?
I'm doing well, thank you.
Cool.
Yeah, Dave, I was wondering if you could look at IBB,
okay,
Biotech Index, and I just wanted to see if it looked like a butterfly between August 2nd, up until September 10th.
I really don't see it. Where would your X to A point be?
X, I was looking at the August 2nd, A to August 16th, B as August 26th, C at August 27th.
IBB, the Biotech Index
Yes,
Fund,
sir.
right?
Mm-hmm.
I don't see it.
Okay.
Go ahead.
No, and I'm not like a big butterfly Gartley. I not that I can pick those out too well, but I just wanted to check into it because it looked like it's. I tried to do the ratios just on a spreadsheet, and it looked like
I don't see anything in here that looks to me like a Gartley.
Sure. All right.
You've got what I think is almost the completion of an ABC up. Started on June 24th at 164.14. You have your B point in August 5th at 201.47. You've got 187.05 as your C point out here. And if we look at our expansions out here, I'm showing them on Tiger TV and in the Den. Basically at a 39% retrace, and that sets you up for a high at 224.38. But I just don't see anything in that August time frame, even smaller out here. Normally, if you can't statistically find at least in a daily chart, if you can't find one on 1 year, if you have to go to such smaller time frames, it probably isn't a Gartley pattern. I know what you're talking about here, which is you're thinking that this the B point would be on the 26th,
mm-hmm.
And you can make it out there statistically. It's a very tough case to make, and I'll show you one of the tools that you can use. One of the things, let me hang on. One of the things that you should try using is Bollinger Bands, and the reason for that is that there'll be a standard deviation away, and if you look at pretty much everything out here, you're going to see that what would have been your B point in this was way within the standard deviation. So
okay.
It'd be hard for me mathematically to say that that was a B point in a Gartley out here. It's well within the levels. But if you notice that the ABC portion of this really feels itself out to the Bollinger Bands. And a Bollinger Band is just a one standard deviation out there at with a simple moving average of 20 in the center of it. But a pretty good definition of a standard deviation in the markets. And we're kind of at the top of that right now. But certainly haven't broken it through all this ABC, which makes me think that there isn't anything in here that would really make me think that those points you talked were statistically significant.
Okay.
So I would just look for bigger Gartley moves out here. When you move back $4 or $5 on a $190 stock, that's probably not it.
All right. No, I appreciate your help.
Okay.
Thank you.
Good enough. And go back to our discussion. We'll go out. Go back. We were talking about losses with Jesse Livermore. And basically, the whole thing of reversing your natural instincts. And when you think about most of the people giving their money away in the stock market, you almost have to do the opposite of what everybody else does. And that kind of hit me like a ton of bricks. That is, you must hope when you're fearing, and you must fear when you are hoping. Of course, we brought this up on the show before, and I think in the den a few times when people have brought up taking losses. And I've always kind of felt this way myself, and that is a loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, not taking the stop, that is what does damage to the pocketbook and to the soul. When you actually have a plan going into a trade, I don't have a big problem with people changing it. Conditions do change, and you have to adapt to them. What really I dislike is people, especially when it breaks either their buy or sell points, and you have huge volume come in at the same time. I mean, you've gotten a sign of strength, or you got a sign of weakness out there, and at that point, you don't take your stop. I can see a lot of times I'll have positions out there that get tested on 25% of the volume of a previous high out there. That's not enough for me to jump off that deep end and say, hey, I'm done with it. When you get that kind of volume, your odds are probably 80-85% chance that thing is going to come right back in to whatever trading range you're in. If you set up your buys and sells and you know where your points were, your buy points and your sell points were within, and where you thought the thing was going to go, you'd have a good idea. And the problem is that almost everybody makes their stops way too narrow, and that includes me. That is a problem for most traders out there. Another one. I have heard of people who amuse themselves conducting imaginary operations in the stock market to prove with imaginary dollars how right they are. Sometimes these ghost gamblers make millions. It's very easy to be a plunger that way. It is like the old story of the man who was going to fight a duel the next day. His second asked him, "Are you a good shot?" He said, "Well, yes. I am the duelist. I can snap the stem of a wine glass at 20 paces." And he looked modest. He says, "That's all very well." But the unimpressed said, "Can you snap the stem of that wine glass while the wine glass is pointing a loaded pistol straight at your heart?" We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And welcome back, all. Hey, getting to the close of the show here, I wanted to look at a few stocks that had been moving. Netflix is coming a little off the highs. A few days ago, we saw 314.18 for the high. It's coming down, very light volume. Of course, we're coming up fairly close to our earnings date for it. And when is that? I think it's coming here, and then the coming month, but I don't see a date yet for it. But I think the last one was July 22nd, so that gives us August 22nd, and we've got maybe 30 days. I still suspect we're going to get one more gap out of this thing. I know we had a caller coming in and was playing it from like 280. I don't know what happened to his position out there, but we got 2 nice gaps in this thing. And I suspect we're going to get one more gap before this thing is done. And then it'll come back and fill them all, which is going to be big. If that does happen, if we get another 20, 30-point gap up, Maybe it'll be on news. That is what I'm waiting to take the other side of this trade, and hopefully probably options on this thing. Missed it on the way up. This is one of the Carl Icahn's big pushes. And, of course, it's always had a perennial high short amount that they just continue to run day after day after day. And hard for me to believe that this does not come back down to earth like Apple has. We were talking about Apple, and we're doing a live call on it last week during its pretty much its rollout on Tuesday. And just a lot of things out here that are interesting. One of the things today, though, I noticed is we're not having the kind of huge volume that you would think. I thought this thing could get back to 465. That's kind of blown through that and headed it down. We'll have to see how the volume ends up today. But most of the players out here, it looks like from options, are going a little bullish on this for the rest of the week. The option players suspect that this will close out somewhere around 465 or 470, so probably not a lot of room to play this stock so far today. Trying to see if there's anything else going on. Just a very quiet market, of course. We've got, let's see if I can get out here. That's it. We're fading, or been fading pretty much since the middle part of the day. 1697, 2.44 billion shares. So what do we've had? About 220 million, shares during the show, which is very, very light. Just expect this to probably come back to 1685, and that's kind of where I expect Wednesday at 1 o'clock, where we're going to actually find out what this market is actually going to do. No volume up at the top, but doesn't mean that we're going to get the surprise and we're finally going to break out above this all-time record, or we fail. And if we fail, I suspect it's going to be a very long time before we see this price again, just based on the price and volume action we've seen over the last little while. Of course, gold, it's what, plus $3 or so. It was up $16. I continue to think we've got 1275 on deck at least for another test, and I'd love, although I may not get it, $1,200 again. And I think at that point, people will be so sick of gold that they won't want to buy it, and I won't have any discussions on CNBC about doing so, and it'll probably be the long-term buy of a generation. Anyway, we'll be back tomorrow probably talking about stocks setting up for the FOMC meeting. But till then, we'll see you tomorrow. Same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.